Uranium is the new oil. We're so early to a global nuclear renaissance. So can Baselode Energy, which is a uranium exploration company, skyrocket? That's the question we're going to answer in this video. So they're exploring and looking for uranium in the Athabasca Basin. That's considered the Saudi Arabia of uranium because the ground is so full of uranium, right? So there's the Athabasca Basin in yellow. In green, we see baseload projects. We have Hook, Bear, Catharsis, and Shadow. And they're saying there was a uranium discovery where the red triangle is. And they call it the Akio uranium discovery. Numerous intercepts of high-grade uranium. So that is positive, right? They have uranium in the ground. At least it appears that way based on their drilling results. So the completed drilling, they know they've intersected something, some quality uranium. Results are officially pending though. This is as of August 2024. Now, 3 weeks ago, Baselode Energy unveils high-grade uranium findings. So Akio prospect shows significant high-grade uranium mineralization. Drill results enhance understanding of the prospect's uranium potential. And so what they have is a high-quality uranium deposit, not clear how much is actually in it. Here's a look at what they intercepted. So what they're pretty convinced they have plenty of uranium in the ground. The question is how much. We don't know, right? But it is positive for an explorer to actually have found some uranium in the ground, some high quality deposit, at least high grade uranium mineralization. That's what they're finding here. It's hard to know exactly how much uranium they have in the ground. The market is just not buying their results currently. Baselode Energy Corp, look at the stock crashing. Unlike most other uranium miners, market cap of $18 million Canadian dollars. So a tiny market cap. We'll go over their financials, but if they have uranium in the ground, which all indicators are pointing that they do have something in the ground, then that's hugely positive. It's very possible that they do have uranium. They've intersected this uranium mineralization. So I'm not sure exactly why the market is totally fading these finds, maybe because there's just so much uncertainty around these results. Then we have the Hook project, right? 2 new discoveries include new radioactivity discovery, results pending, massive clay alteration, results pending. So they're pointing to potentially there being uranium in the ground at Hook as well. Then we have the Catharsis project. 2 drilled areas have defined a uranium fertile structural corridor on strike with the geological trend that hosts more than 2 billion pounds of uranium. Speculative, right? One thing to note about mines, it's like that Mark Twain quote. The definition of a mine is a hole in the ground with a liar standing next to it. So you do have to be super careful with these explorers, right? Unless it's proven that there's serious pounds in the ground, you have to take it with a grain of salt. But these guys are proving that there is promising potential with where they're looking. And then Bear Project, they've identified a follow-up target, right? So that's where we are. They have some promising drill results. They say they found uranium. And so the question is, how much uranium do they have, right? And so when looking at a mine, all that matters is its valuation. Either it's undervalued, fairly valued, or massively overvalued. If this mine was $10, it'd be worth buying, right? If it was $1 billion, wouldn't be worth buying because it's super speculative. So let's see what a fair value is for this mine, right? So as of this presentation, August 2024, they're saying they have cash of $15.8 million Canadian. So literally you can buy this whole company for close to the cash on its balance sheet. That's pretty massive, right? So it is in that deep value zone. The risk with uranium explorers is if they don't find uranium, they're just going to be a money pit, right? They're going to have to keep printing shares, keep diluting their shareholders to find uranium. They might never find meaningful uranium. So there's massive risk with these assets. Now, the market cap is so tiny, you're kind of being compensated for taking that risk because this asset is, it could be argued, fairly valued, right? They have mining rights near the fertile Athabasca Basin, right? They found uranium at 1. There's just a question of how much. They have cash on their balance sheet from mainly diluting their shareholders, right? But they do have cash on the balance sheet. The market cap is tiny. And so when you look at whether or not this asset is fairly valued, it seems to be fairly valued, right? Massive risk, potentially massive reward if they do hit the mother lode, right? And we know uranium is in a multi-decade supply crunch, so it's worth more and more and more over time. So the mining rights are going to be worth more. and the uranium they find in the ground is going to be worth more over time. But again, still super speculative. So let's look at the financials for this company. Starting with the balance sheet, this tells us whether this company is financially healthy, right? Total assets, $16 million. Total liabilities, $3 million. So they're not going bankrupt anytime soon. Let's see how their current assets compare to the current liabilities. Current assets, they can spend within a year. Current liabilities, they have to pay for within a year, right? So the net difference, 16 million current assets, 3 million current liabilities, plenty of cash on hand. Currently, the market cap of this asset is trading close to their current cash position. Now, this is at risk of future dilution, obviously, right? Where are they getting their cash? To figure that out, let's go to the cash flow statement, right? Operating cash flow over the last 12 months, they spent $7 million. So that's their burn rate. Every 12 months, they're spending about $7 million. That's outflow. Inflow, financing cash flow. So from equity raises, right, selling shares into the open market, diluting shareholders, they were able to raise 21 million, right? So that's why I think this company is at an extreme risk of future dilution. They have about a year and a half probably of cash on hand. And even if they do find uranium, they're going to have to do another massive raise. Now, yes, they can take on debt, but explorers are brutal. Unless you find the mother lode, it's difficult for these not to just keep bleeding cash, right? So that's the beauty of this asset. Massive potential reward, but massive risk. The reward comes if they find millions of pounds of uranium in the ground. It becomes very profitable to get it out of the ground. Therefore, they can get financed, and this could become a multi-billion-dollar company one day. The question is, it's just a huge if, right? They won't necessarily find it. But as far as explorers go, I would say it's high quality. The market cap is tiny. The amount of cash they have is almost equal to the market cap. They found uranium. Results are pending. It's just extremely risky, like all explorers are. But if you want to take a massive gamble on a uranium miner, if you believe uranium's the new oil, then this company's assets should be worth more than its current market cap in the future, right? Especially pending good results with their findings. But it's almost a coin toss. You could lose it all if they don't find anything truly substantial, or you could get filthy rich if they do find something truly substantial. That's where the risk reward comes in. That's for you to decide, is it worth it for you to invest in a tiny market cap early stage asset that could potentially hit the mother lode and make you rich, but also make you lose everything or not?